well, they could cut by 50 basis points, and they might, but I don't really see the case for it. I think it's much more likely they're going to go by 25. Markets are all fired up now. We've got 175 basis points worth of easing priced into the yield curve between now and January, and that just doesn't seem likely to happen at all. The economy is not shrinking. That's the most important thing to keep in mind. There is no recession. We're creating jobs at about 117,000 people per month over the last 3 months, and that's just about what it takes to keep the economy at full employment and growing close to its potential rate. There's no sign of layoffs in the average weekly claims data. The consumer is very, very strong, and from the Fed's point of view, the inflation target still hasn't been achieved. The inflation is still a little bit hot. So, yes, there's a case for easing monetary conditions. The Fed chair told us in Jackson Hole he's more convinced now that the economy is on track to achieve its inflation target. They want to cut rates to keep real rates from rising, but an emergency kind of cut of 50 basis points, I don't really see a strong case for it.
Carl, the Bears think differently, and they paint a story around the loss of momentum now in the labour market, the slowing that we're witnessing to the PCE data getting back towards target, and other key metrics across the economy around manufacturing in particular. So it does point out a very dicey position here, and you're seeing it even in positioning around the 50 basis point option versus 25 basis points. How difficult is it for Jay Powell to get this one right? Some are saying if he manages to do so, he goes down in the Hall of Fame for the Fed. Do you think it's that big a moment for Jay Powell?
Well, this is a make or break moment for the economy for sure. If the Fed leaves rates too high for too long, it will cause a recession. It's done that in the past, and it could do it again. Jay Powell is very finely tuned to the state of the economy. He sees the same numbers that we do, plus more. And the Fed's own beige book does confirm that the economy is slowing. But there's a difference between slowing and contracting. And this is a most extraordinary kind of business cycle because we're at full employment right now, and the economy is growing by 2.5%, according to the Atlanta Fed. The payrolls report, if we break out of that hours worked, average hourly earnings, calculate the increase, add to that the increase in payroll employment, we get an estimate that says that nominal GDP is growing by more than 4% and real GDP is growing at 2.75%. This economy doesn't need a strong rate cut to keep on growing. It needs care and maintenance. It doesn't need a drastic treatment.